So we can stack up all the positives. I mean, I know you've been kind of in gear with that idea that the economy would power through, inflation would come down, the Fed could become friendlier, earnings are going higher. Big question to me is how do we set expectations for the year to come, given that that's all in the books?
It's a great question because, you know, we have two back-to-back 20% years, and now investors are wondering how much good news is baked in. But if we look at the 2025 environment, it's a great setup because we have a new administration coming in that's maybe pro-animal spirits, you know, a Trump put. We have a dovish Fed, and as you're pointing out, interest rates are kind of calming down after rising. And we know there's still $7 trillion of cash on the sidelines, and I think sentiment's coming back into check. You mentioned that before with the AAII numbers. So I think it's a good setup for investors. I wouldn't be too worried about the next 12 months.
So don't be too worried. I mean, it seems as if there are all these supportive factors, and when you mentioned the 20% up years in a row, history says actually, you know, the following year is up more often than not as well. What do you mean, do you think, specifically by the new administration being pro-animal spirits? First of all, it's true.
Yeah.
You've kind of seen it at work. It seems to pull in that direction, but are there specifics that the market is fixated on that it's going to drive that dynamic?
Yes, I think that the market's trying to figure out exactly how this animal spirits plays out in markets, but I would say we've got a Treasury Secretary that equity markets approve of. We do know that the last Trump presidency cared very much about what stock prices do, and Jeremy Siegel said this is the most stock market focused president ever. And I think that the uncertainty is around trade and the potential risks around tariffs, but we'll have to see. I mean, that's something markets are going to have to deal with it from an uncertainty perspective.
It's interesting to me that, you know, the way the market has behaved in the last several weeks, but even going into the election, was we need to own more cyclicals, we need to own more financial stocks, we're going to reprice this market for maybe a growth acceleration even, or at least maintaining above trend growth. Meanwhile, though, we're only a couple months removed from a pretty big growth scare. Job growth has kind of slowed to a point. The housing market seems pretty locked up. It's kind of interesting how the sentiment has kind of jumped ahead. Is the economic numbers positioned to actually validate that view?
Markets tend to be forward-looking, so I would expect this. I know there has been a recession in durable goods and in housing and auto sales, principally because of high rates, which have made affordability an issue. That's really on the come next year. I mean, I think the spread of 10 years and mortgages should come down, and the 10-year hopefully behaves. And I think if there's more confidence and more supply, I think housing actually could lead this recovery. I mean, I think that's why home builders actually started to act better this week as well.
Yes, they seem very sensitive too to yields, you know, sort of halting their rise as well. I guess the question is, if we believe it's still a supportive environment, and pretty much all the things you can identify would suggest you shouldn't be too worried about next year. The second question is something like the S&P 500 the best vehicle to capitalize on that?
I think investors are still trying to figure this out. We did a survey with our institutional investors and our RIA clients last week. The majority of institutional investors don't think FANG is the leading trade. They're actually betting on cyclicals. But if you look at the RIA world, the majority are betting on FANG. So I think the market is still undecided whether to be long the Mag 7 or the cyclicals. I'm inclined to be more cyclical and bet even on small caps having a very big year next year.
At the recent Bloomberg Intelligence Conference titled, Gen AI, Will It Deliver on the Productivity Promise? Industry giants and emerging innovators gathered to discuss the profound and potentially revolutionary wave of AI transformation sweeping through various sectors. Among the noteworthy mentions were companies like Nvidia, PayPal, Adobe, and Amazon. These titans of industry are not only embracing AI technologies, but are also actively redefining their roles and operations by harnessing its vast capabilities. As we delve deeper into this fascinating narrative of change and innovation, one must wonder, are these AI-driven advancements merely the tip of the iceberg in what might become a sprawling, all-encompassing digital revolution? Or are we on the verge of a technological epic that will reshape the way we live, work, and interact with one another? Welcome back, everyone, to Investocracy.
I think the semiconductor intensity of everything we buy is going up.
Yeah.
So
everything has a chip in it.
Yeah, everything has a chip.
Yeah.
It may not be an Nvidia chip, but it has a chip. And I would say, to me, that's been observable from early on, and now that we're more of a digital economy, it makes more sense. More of our GDP growth is also native digital as well.
So given that you think that technology is going to become, you say likely become 50% of S&P 500, I'm guessing you think that AI will not be a bust.
That's right. I think AI is
what's in this? There's a lot going on here.
Yeah, this is a multi-layered chart.
Okay.
The top half of this chart, which looks like waves, is the measure of the gap between the number of prime age workers, total working age population versus people. So like when this wave is positive, that means you have a shortage of workers relative to the total population.
Okay, got it.
And then you'd think, what do companies do when you have labor shortage? You have to invest in automation. Yeah. So then the bottom chart is tech's price ratio to S&P, and it's gone parabolic every time there's
every time there's a prolonged labor shortage, which I think we just lived through, the result is that companies invest more in tech.
Yeah, because otherwise you have inflation.
Well, we just had like the mother of all prolonged inflation issues and labor shortages outside of the 70s.
Yeah.
So it would stand to reason companies are taking a lot of meetings now about how do we make sure this never happens again.
That's right. And then a second overlay on top of this is that the global labor shortage is even bigger.
Yeah.
And the U.S. is the primary supplier of technology worker replacement.
In a rapidly evolving world where technological whims can be as unpredictable as the stock market's notorious twists and turns, Nvidia Corporation stands out as a steadfast beacon of innovation and stability. It's become the backbone of everything AI-related, with their GPUs being as essential to modern computing as morning coffee is to the workspace. Hyperscalers like AWS rely on Nvidia's hardware just as much as cutting-edge startups across a plethora of sectors do. According to Bloomberg's AI Index, AI stock performances have been a mixed bag, reflecting the broader uncertainties and fluctuations in tech markets worldwide. Yet, Nvidia continues to shine with consistent outperformance, a sentiment echoed by the likes of JP Morgan. These financial analysts see Nvidia as pivotal in enabling next-generation generative AI applications that promise to redefine entire industries. With demand burgeoning in cutting-edge verticals, Nvidia's growth story resembles that of a relentless bullish stock, a situation that prompted an inside joke within market circles. If AI were a poker game, Nvidia would hold all the cards, and perhaps even the dealer. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
I still think that's like the most obvious investment thesis that exists. I don't know which stock at any given time, but like it just seems the tailwind there is permanent.
Yeah.
Like it might have a couple of down quarters like in 2022, but like bigger picture, there is no company in America that's like, how could we spend less on tech?
So BlackRock is preparing to launch, this is from the Journal, a more than $30 billion AI investment fund, $30 billion with Microsoft to build data centers and energy projects to meet growing demands stemming from AI.
Wow. Yeah. And that's probably not enough money, right? Because I think OpenAI's CapEx is like $50 billion.
Well, there's a debate internally at Goldman Sachs. You probably read the article this week. It was in the New York Times. They have an analyst named Jim Covington, and he says it. I was scarred by the dot-com bust. He was like a 22-year-old, got his first analyst job at Goldman Sachs, and they laid off his whole group within a couple of years. So I think he's acknowledging that he looks at things through that prism, but he's basically saying anytime in history where we build too much of something that no one really needs, it ends up being not great. And he's seeing the same parallels now. He's basically saying, I don't see where the ROI is on $1 trillion in spending. So Goldman, very wisely, they have some really bullish people on AI there too, which of course they do. They turned it into content. They had their biggest AI bull debate this guy, their biggest AI skeptic, and they invited an audience. So this is the biggest investment bank in the world. Not sure whether or not AI is .com 2.0 or something different. So I think it's hard for everyone to understand, like, did we bid these stocks up too much, or maybe are we underestimating it?
OpenAI is what, 100? What did they raise at 100? Was it 150?
Yeah, I mean, these are so right, and now they're going to be full blown for profit. They're not going to pretend that they're doing charity work. But how do you know? that this AI thing isn't setting us up for even though the internet turned out to be real, it also turned out to be a lot of wasteful investment leading up to it. How could you really be sure that we're not doing the same thing again?
We don't, right, without perfect foresight. But I think Covington should review those interviews in the 80s where people debated the personal computer, and it was the experts that dismissed the future of personal computing.
Okay, so there's been skeptics for every technology wave.
Yeah.
Okay. He could also be right. He could be right and then wrong long term. That's another possibility. So
and one thing that people haven't studied is after the dot-com bust of 99, the biggest stock winners were the dot-com stocks. Like
the ones that survived.
Yeah, because when fiber prices collapsed, that opened the world for Priceline, eBay, social media, and the structure was very favorable. There was no reciprocal termination, so Netflix could broadcast without paying for carriage on the internet.
Right, but what you had to know in 99 was buy Priceline, don't buy eToys.
Meanwhile, over in the creative domains of design and media, Adobe Incorporated is elevating the game to an entirely new level. With its Firefly suite, Adobe has integrated GenAI seamlessly into artistic workflows, a move that helps turn creative visions into tangible realities while responsibly addressing regulatory concerns around intellectual property. Adobe's role as a leader in AI-driven creativity reaffirms its vitality and importance in a market where content has become as valuable as any stock. Walking the fine line between innovative artistry and legal responsibility, Adobe emerges as a formidable contender, a whimsical yet powerful underdog stock ready to soar through the echelons of the creative world. Amidst all the excitement surrounding AI advancements, Bloomberg's AI Index notes a peculiar undervaluation in AI software and applications compared to pre-pandemic highs. As generative AI applications continue to mature and proliferate across diverse sectors like cloud computing, 5G, and fintech, the potential growth landscape is one eagerly waiting to be maximized. JP Morgan analysts strongly urge investors to cast their net wide, considering not only the stalwarts like Nvidia, PayPal, and Adobe, but also remaining vigilant towards the rising stars of vertical-specific AI applications, each poised to serve as promising points of diversification in an ever-changing market. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
You can fundamentally make the case that small caps are worse businesses now because the valuation gap is 8 points a multiple. If there's a chance for the multiple to catch up, including Fed cuts, mergers, regional banks, biotech rallying, all of this would argue that should flip, so small caps should be outperformed.
Let me tell you a story of how that happens. And tell me if you think there's a decent chance of this being the way it plays out. For the last 3 years, we have worshipped at the altar of the hyperscalers who are building the infrastructure for the AI era, including the GPUs, including the cloud computing. Okay, so those stocks have already made the move on the AI age. Okay. The way small caps, no small caps meaningfully were involved in AI. There was one, it was called Supermicro. They made it a large cap, and now the Justice Department is kicking their doors down.
Yeah.
So it didn't go well. So no real representation of the AI theme in Russell 2000, which I think explains some degree of the lag. Here's the story for how that flips. What if all of a sudden we start hearing on earnings calls for the mid-cap 400 or the small-cap 600, companies coming out and saying, all that money that we spent on AI, here is the yield of that in the form of increased profits, either because they were able to expand revenue without hiring more people, or they were able to save money on a big cost center for that business. That's the story of how small caps could play catch up. It's not a revenue growth story. It's an earnings and a margin improvement story because of AI actually enabling more productivity. How? It's a fairy tale. It's a happily ever after. But
everything that guy just said is bullshit.
Could it work? Could it work that way?
Yeah, and it's actually a dollar multiplier thing that you're talking about.
Yeah.
On top of that, because I know like Dan Ives has said there's like, I forgot, $3, $5 of non-AI spend that follows AI spending.
Yes.
And if that's infrastructure or if it's people getting jobs, or if it's software or services or advertising, that does spill over.
Non-AI spending that happens because of previous AI spending.
That's right.
Yeah.
And then on top of that, as you know, China's been dormant for a long time, and
That's what they want you to think.
Yeah.
No. But okay.
The source of incremental spending as it turns, because it helps Europe and then it helps the global economy.
Okay. So we don't think the Russell's going to sell at 20 times earnings the way the NASDAQ does, but like there is a way that this could happen, and these stocks could repeat what they did after the dot-com crash, which is outperform for the rest of the decade.
Yeah, it was a 12-year relative outperformance cycle, several hundred basis points a year. And that was a great time for investors because they could find a lot of great stocks that were 10x names.
Are valuations as cheap now as they were in 2002? In small cap?
Yeah, on median PE and on relative price to book, it's the same.
As we wrap up this thrilling saga of technological transformation, one cannot help but feel intrigued and captivated by the enormous potential AI stocks possess in today's market. With trailblazers like Nvidia at the forefront of this narrative, the productivity revolution propelled by AI appears to be merely gaining momentum, seemingly poised at the precipice of even greater achievements. The current strategic positioning of these stocks, particularly Nvidia, holds immense promise as these companies' AI-driven solutions continue to meet the multifaceted and sustained demand across a myriad of sectors. Looking ahead to 2025 and beyond, the forecasted growth in AI-backed applications is not just enticing, but potentially revolutionary. As the global economy prepares for this monumental technological shift, strategic positions in AI stocks may very well offer robust long-term returns and remarkable investment opportunities. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen.